I'm Matt Cole, CEO of Strive, and you are watching Sachin Syal's Ochakde Show.
Hello, everyone, and welcome back to the Ochakde Show. We're Silicon Valley's first business and self-improvement podcast for teens, hosted by a teen, me. I'm Sachin Syal. I'm an 18-year-old award-winning entrepreneur, podcaster, and student from the Bay Area, and I interview remarkable and influential entrepreneurs, executives, investors, leaders, and inspiring individuals from all walks of life so we can learn from their stories and level up ourselves. I'm also the co-founder and CEO of 3doshas.com. We're a coaching company transforming lives with 3dosha science from yoga and Ayurveda. The purpose of this show is to inspire you to go for it, which is what the Punjabi word ochakde means. Today we have an absolute legend, guys. Our very special guest is Matt Cole, who is the CEO of Strive Asset Management, which is a financial services company and asset management firm. Strive was founded by American billionaire entrepreneur Vivek Ramaswamy. Prior to Strive, Matt worked for the largest pension fund in the United States, CalPERS. Matt holds an MBA in finance from Sacramento State University, and he's also a CFA, which is a Chartered Financial Analyst. So welcome to the Ochakde Show, Matt. How are you, and what's new and exciting?
Oh, I'm doing good today. How are you, Sachin? I'm really excited to be here and get going on this conversation.
I'm doing amazing. I've really been looking to this interview. It's cool that you're wearing your company merch, I'm wearing my podcast merch, so I love that. Um, let's just start with this question. So this podcast is for teens. Can you bring us back to your teen years? Where were you raised and what were you passionate about as a teen?
Yeah, so I was raised like you in Northern California, although a little bit more inland. Grew up in the Sacramento area. As you mentioned, I went to Sac State, but that was my home. That was, and I have a lot of love for Northern California, as I think you do as well. A lot of the natural beauty there. But I grew up as a kid that I had talents that I was really good at, things that I was not really good at. But I would say I didn't really have a clear direction of my path. And I think that when you talk to the younger generation, that's a pretty common theme of
Mhm.
I don't know what I want to do for my life. What am I going to do? And so for me, I was very gifted in math. That was the gift that I was born with. I didn't earn it. I just was really good at math. Okay. And didn't know what to do with that. But my parents were in law enforcement and basically was trying to decide based on what I know and respected, and I still respect, which is people that serve this country, whether it's through our military or law enforcement. But that was something that was a pretty easy path for me to potentially go down, just given I knew it in and out with my family, or go a more uncharted path for my family, which is in the direction of my God-given skills of math. And I ended up going the math direction. But when I was a teen, I didn't know what that meant. I would go as far to say when I was a teen, I thought all you could do with a math degree was become a high school math teacher. And so that wasn't what I wanted to do. So it felt kind of potentially like a lack of purposeful path. But what really was helpful for me, and I think something for anyone, regardless of what you're good at, was finding mentors in your field that can help direct you and steer you and see what you're good at and put you in that direction. And for me, that really rang true when I was in college, where a couple different professors pulled me in and said, I want to mentor you. I see these skills in you. And that made the difference for me. And it's something that myself and I know many other people in the professional environment love to do to the next generation, because without that, a lot of people will struggle to find their ultimate destiny.
That's awesome. That's a cool story. I wouldn't say I'm the best at math, but it's awesome that you have that skill. So let's talk about, can you just explain to my teen audience, like, what does Strive Asset Management do and what is your role as CEO?
So we're a financial services company. So we have an asset management arm and a wealth management arm, and I'll explain the difference. So asset management would be a product different products that you could buy, whether it's in your retirement account or your investment account or your wealth manager's investment account, where they could buy basically our ETFs. We have other products too, but our biggest products to date are our ETFs. So they could buy one that gives exposure to the stock market or the bond market. And like any startup, Vivek, and then ultimately myself and other people that were part of Strive in the early days and today saw an opportunity. And I think when you talk about entrepreneurship, you need to see an opportunity. And I'll talk about the opportunity we saw, but more importantly, if you take a step back, why we saw something. With Strive, what we were seeing was a difference between what people were saying behind closed doors or amongst their friends and what they were saying publicly. And this was a difference at the highest levels of society, CEOs in America, and we're talking right now about Strive's differentiator, which was standing for American capitalism, for meritocracy, and standing against things that were contrary to that, which broadly speaking mostly was the ESG and the DEI movement. But what we were seeing was behind closed doors. So whether it was where I was at CalPERS or with Vivek as the CEO of a large company talking to other CEOs, where behind closed doors, I would talk to my colleagues and most of them would say, I don't think these ESG or DEI policies make sense. I don't think they're going to help CalPERS make more money. Vivek was seeing CEOs say, I don't think these policies are going to help my company succeed. But yet publicly, there was this pressure to go out and bend the knee and say that. So regardless of what we're talking about, when there's some difference like that, a disconnect, that disconnect creates an opportunity for an entrepreneur. And ultimately, that's what we saw with Strive to go solve that. So that was asset management. Our wealth management offering is similar, but going to everyday Americans, say, hey, if you need help managing your wealth, you need someone to talk to. And we were going to do it with, the Strive way, which is our American governance, capitalism, shareholders first exceptionalism. But there was another disconnect that came up. And that disconnect was that if you talk to the average advisor or even the average investment professional, they personally are investing in cryptocurrencies like Bitcoin, and yet they would not put their own clients' money in there. And you would say, why is there this disconnect? This is not tied to ESG or DEI at all, right? And what they would say is, I'm afraid of the career risk to be the first to put my clients in Bitcoin. But me, myself, I believe in it. I see these macro issues, the debt crisis, inflation crisis, geopolitical tensions, government overreach. And I think Bitcoin's a great hedge and a return potential generator. I'm buying it, but I'm not buying it for my clients. That disconnect opportunity. So that plus the initial Strive differentiator of capitalism, excellence, meritocracy is what we're doing as we launch into wealth management.
Capitalism, excellence, and meritocracy. I love that. This was my next question. So Strive founder Vivek Ramaswamy, he's a proponent of merit and meritocracy. How does Strive apply these values to the culture of the company?
Yeah, so we apply it in two ways. So obviously, to your point, we have a company, we have employees, right? So what we do is we do a rigorous stance to how we hire people. So every single hire that we do does skills-based assessments. And what that does is a couple of different things. One, different people can talk really well about what they're doing, but actually having to show a work product reduces the chance of having a disconnect, right? A disconnect between that creates a lot of challenges. And ultimately, it's not good for the employee either. What you don't want as an employee is you don't want to come into a new company and think that you are going to be a good fit for them. And then, 2 weeks into the job, you're a horrible fit. And now you're looking for a new job, hoping not to get fired, all these different things, right? That's not good for anybody. And so we try to make sure that the people that we hire are good fits for Strive. And then secondarily, once people are within our system, we look for a merit-based process to judge them. So part of that is annual reviews, consistent feedback, weekly reports. You remember when Elon took over Twitter? I don't know if you remember some of the back and forth between the Twitter CEO and Elon at the time, where Elon's like, "What have you done this week?" And obviously, every person's going to have weeks where they crush it, weeks where they don't get as much done. But in a merit-based culture, you should be able to say, here's what I'm doing this week. Here's my priorities. Here's what's going well. Here's what's not going well. And then what that shows is your ability to get stuff done. And then that allows for a process that is more likely to bring up the high performers and get out the low performers. And I'll say that like that can sound difficult to some people sometimes. And some people don't like it, but I have a strong belief, and this kind of gets even into some of the principles that Elon Musk and Vivek are doing with Doge on the government, right? Of they want to fire 75% of the staff, and you're like, oh, that's so heartless. And I believe it's actually heartless to not tell people the truth. And that if you care about someone, you tell them the truth, even if the truth might be hard to hear, because ultimately, even if that means someone might lose a job, they can then go find a place where their skills are wanted and needed and they're producing at the highest level. And ultimately, that will provide more satisfaction to themselves and hopefully allow them to reach higher levels in their life.
I agree. And honestly, I think all companies should do it like how Stripe is doing it. And I'm actually really excited to see Vivek Ramaswamy and Elon Musk with Doge, which is the Department of Government Efficiency. I think is going to be phenomenal. So Strive is known as being anti-woke, anti-ESG, and anti-DEI. Can you explain what that means to my audience?
Mm-hmm. Yeah. So Strive came out and we never said any of those. But the media labeled it. So it's important because you have a media that sometimes will label people how they see fit. But what did Strive actually say? We said we were pro-capitalism, pro-excellence, and pro-meritocracy. And when things were disaligned with those three statements, we would call them out. And the media labeled that as anti-woke, anti-ESG.
I see.
Yeah. So from my perspective, and I actually do believe this, that it shows that the ESG movement and the DEI movement is anti-capitalist and anti-meritocracy. And I think that's a very interesting statement because we will always be pro-capitalism, pro-meritocracy, and pro-excellence. If ESG or DEI were aligned with that, then we could in the future be pro those things. I don't think it will be, but it's not a principled stance to be against something. It's a principled stance to be for something. And when you're for something, that's how you push excellence, innovation, right? Achieve great things, build 100-year brands. And so it's why I think it's so important. But when we talk about wokeness as an example, wokeness, in my view, is just a set of values, okay? And those sets of values, we could debate good or bad. My point would be in corporate America, corporations need to be centered around their mission. And those missions will be they should be agnostic to values of secular people, whether those values are woke values or religious values. And I say that as someone myself, I'm a religious person. Okay? I am a Christian. Strive is not a Christian organization. It's not anti-Christian, but it's not Christian. We are not anti-woke. We're not pro-woke. We are pro-excellence, capitalism, meritocracy, and taking apart these values from a business that has its own mission, right, to maximize value for our shareholders. And so that's the principled way to approach this.
It's interesting you said that because literally almost everywhere I looked, like I got that from Wikipedia. It always says you guys are anti this, anti that. It's really interesting how the media does that. How do you guys deal with the media?
So the media is what the media is, right? And ultimately, we cannot control the media. We can only control our own narrative, right? And so I don't really care, I guess is the bottom line. We spend a lot of time saying, this is what we're actually for, and then you get biased reporting, right? And I think the biased reporting is that the media has today a very left-leaning pro ESG, pro DEI, pro wokeness, if you want to call it that, mindset, right? And against a lot of these other principles. So it's not surprising to me that they're going to look at companies like Strive or really any company that threatens them, right? So like Elon Musk threatens the media in a major way, right? Where I don't know if you saw this, but today there was this big press conference with one of the founders of a company called Axios, and he was just railing on Elon Musk's comment that the people are the media now. And he just thought that was so wild and so incorrect. And And I've just come to appreciate that when you're a threat to someone, they're going to try to take you down. So Strive is a threat to the movement of larger asset managers, larger wealth managers, and to some extent, the media and I would say the overall system in America. So is Elon Musk. So you have to expect that the media is going to come at you, but we just don't let it. We're not going to change. We have, and I
That's
think
awesome, man.
why do I feel so confident in that? Because we have a firm foundation of what we stand for, right? And I think that that's so important is that when a company or a person doesn't have a firm foundation, then they're just going to sway with the directions that things are going. Right now, what Strive stands for is kind of cool. It wasn't cool
It's
2 years
it's
ago.
it's
It
really
was
cool in my opinion.
but it wasn't 2 years ago. It was cool to me, and it was cool to Vivek and a bunch of other, a handful of people. But it wasn't cool in society at large. I think now it's cool. But regardless of if it's cool or not, we believe it's the right thing to do. So that's what we're going to do.
I love that. And I love seeing you on Bloomberg and Fox News and stuff. And I continue to watch your interviews on there. They're awesome. Um, what exactly is the problem with BlackRock, State Street, and Vanguard? And how is Strive different?
So first off, I don't believe that any of them have a set of firm foundational principles that they stand for, and that lack of a firm foundation pushed them really far towards ESG and DEI policies at the expense of their shareholders
Mhm.
ultimately. And you have to remember that these asset managers are extremely powerful. They each manage somewhere in the neighborhood of $10 trillion. Dollars. And if you look at the largest shareholders of almost any company in the S&P 500, which is the largest companies in America, like your Googles, your Apples, your Microsofts, right? Their largest owners are BlackRock, State Street, and Vanguard. So, as an owner of a company, and they're really owners on behalf of their clients. They themselves are not owners, but they are the ones that interact with these companies. They have a huge say in what these companies like a Google or an Apple do. And so if their principles are bad, if they're moving too far towards ESG and DEI at the expense of meritocracy or capitalism, you could see how in one fell swoop, almost every company, large company in America, could change because they all have the same owners. And so that's why, regardless of if you agree or disagree with ESG, DEI, or capitalism, meritocracy, you have to respect that when every single large company has the same large owners, that corporate America can kind of be swayed all together, right? And so you saw this huge shift towards ESG and DEI, so big that this year, over three-quarters of companies, three-quarters, 75%, were tying the payment of incentives, so the payment to the CEOs, how much money they make, to implementing ESG or DEI, to the point where you got to do it or you don't get paid, right? And so that creates a huge problem because you could have a CEO, and we've had conversations with CEOs that will say this. I don't agree with these things, but ultimately, I'm not the authoritarian. I have bosses. My bosses are the shareholders in quotes, right? BlackRock, State Street, Vanguard. And if they tell me you got to do this or you don't get paid, then I'm going to do it, right? And so to unwind that, and I think it is unwinding. It took 14 years basically to get this into corporate America. I think it can unwind faster than 14 years because I think it's a house of cards, but it's systematic in corporate America and our government system, and it's going to require drastic change. And BlackRock, State Street, Vanguard, they're starting to kind of come back a little bit, not support these issues, but they're not helping at all unwind any of the damage that they've done. And I think that if you think about trusting your money with someone, I would want someone that I trust has a firm foundational belief of principles, right? I don't like Strive's principles. I love them, and I think a lot of people love them, but regardless, the worst thing is someone that just sways with the wind because then you're going
Yeah,
to just be at risk that they're going to move in a direction you don't like.
I agree. It's really sad that CEOs have to deal with that actually. And I think like any big company, like any big tech company, I think they're kind of like the CEOs are forced to do ESG and DEI. It's kind of unfortunate. Um, I wanted to ask you, How do you envision the future of Strive with the next 4 years of leadership from President-elect Trump, Vice President-elect JD Vance, and then also President Trump's cabinet administration? My friend said it the best. It's like the Avengers. We got RFK Jr., we got Tulsi Gabbard, we got Vivek Ramaswamy, Elon Musk, so many people. So how do you envision the future of Strive with the next 4 years of our phenomenal leadership that I think is going to happen?
So first and foremost, I think this incoming administration and Avengers group of, they call it basically the dream team of people that if you're going to
100%.
make major change in the government, the best chance you could have would be this team of people, right? Within the government and then this Doge group of Elon and Vivek. And I'm very bullish on major change happening. And I think that change will be great for America. Because ultimately, what I care about here is leaning into innovation and creating a better future for my children, for the next generations to come. And I think that's through innovation and leaning into it, not through constraining growth, constraining innovation. And I think ESG and DEI were on that path, whether it's energy, whether it's AI, whether it's cryptocurrencies,
Hmm.
whether it's hiring of people, name your thing. It was massive constraints, and massive constraints in a debt crisis is a path to failure. So I'm very bullish on major change. What it means for Strive, I think it's good. It's also, but it's really good for shareholders, because I think at the end of the day, this can be really good for the price of equities. It can be really good for the price of cryptocurrencies. Strive, I think, was on a path for success regardless of the election path, because, man, like, in a certain sense, it's like it's so easy to call out the craziness of it, but I would rather just have change. I'd rather have change now, because we are fiduciaries. I think it's neutral for Strive. Strive's on a great path to success, but it's great for our country.
I think Strive is going to absolutely take off, and I think it's going to do so well. And if you guys have such an awesome CEO, Matt Cole, I think it's going to do well. I wanted to also ask you, I saw you talking about this, I think a few weeks ago on Fox News about the AI revolution. How do you think that the AI revolution will affect finance, and what should teens know if they want to get into finance right now during the AI revolution?
So like many technological advances, it's going to speed up the rate of change in a major way. So what that means is that jobs in 10 years from now probably don't look like jobs today. And that would have been true when the internet started as well, right? Where before the internet, I mean, imagine what the life of everyone that's watching this is today with the internet. It didn't used to be like that, right? And I
Yeah.
think AI is going to be a similar thing. But it's important to remember that AI didn't, or the internet didn't get rid of jobs. It just changed
Hmm.
what jobs did. It changed the ability of the individual to be productive. And so I would say for people, and I think this is true for the younger generation, I think it's also true to people that are in my generation, the millennial generation. Unless you're at the very tail end of your career, you need to become smart about AI, and you need
Yes.
to become smart about AI now, right? And so I think that's for career advice, that people should be learning it, using it. How do you actually think innovatively to get better results? And I'll just say, like, some of the things that we're seeing from some of my team members that I think are interesting. Some people will use different AI systems and have them interact with each other. So they'll be kind of like the intermediary, like kind of making them talk to each other and really refining some of the results. And ultimately for a company like Strive, what I think AI is going to do is, as Strive succeeds into the future, I think the amount of employees that we'll need is going to go down. And I think that the people that will be successful will be people that integrate into AI. We're lucky in the sense that we're a small company. We don't have a ton of employees, but larger companies, I think people are going to lose jobs, right? And just like we talked about with Doge, I don't think that's a bad thing. I think
Hmm.
it's going to force people to become the most efficient and valuable version of themselves. But for the younger generation, if you want to, you should view AI as something that's a tailwind to push you up versus something to hold you back. And if you integrate into it, I think it will be that.
I 100% agree. I'm always fascinated by AI. I love ChatGPT and so many other tools. I even use AI for my podcast and it helps me with that as well. Um, so I want to talk about your time at CalPERS. You were there for 16 years. How was your experience there, and what made you want to join Strive after CalPERS?
So people probably are surprised to hear this, but I actually had a really good experience at CalPERS as a whole. I started there as an intern, and so
Nice.
for the younger generation, that would be a pretty strong piece of advice. It is, to get a tangible skill before you graduate. That
Mhm.
tangible skill could be through entrepreneurship, just doing something your own. It could be through an internship. But if you just go to school and graduate, you're not in a position to integrate into professional environment. And so I was an intern there. That was extremely helpful. I became, the intern turned trader. So I was trading fixed income securities. Turned, young portfolio manager there. That was super into Bitcoin, and everybody thought it was weird. But like, anyways, so I had a good experience there as a whole. Um, Towards the end, the last several years there, they started pushing more towards ESG and DEI, and both of them, not or both of them. And it got to the point where I thought it was extremely distracting from my job. And make no mistake about it, investing is hard. And
Yeah.
if you're trying to invest and you're trying to make money beyond your benchmark or your goal, you need to be fully focused on that without constraints. And they were not creating an environment where that was possible. And so it wasn't just myself that it was impacting, it was impacting the organization at large. And ultimately, my passion, and this is still one of my main passions, but is in helping fix the retirement crisis that this country faces. And that retirement crisis was at CalPERS, where
Hmm.
they did not have enough money to pay the pensioners that were relying on CalPERS. They still don't. They have about 70 cents for every dollar that they owe. That's a really hard problem to solve. And just as an example, I was among, if not their best performing portfolio manager there. During my time there, I made $1 billion of alpha. And
Wow,
$1 billion is
that's
a lot of
awesome.
money. And it's just like,
Right.
that's awesome. They were $200 billion underfunded, though. And so the point that it was awesome, but it also wasn't enough. Right. And so for me, as I'm thinking about people like my parents that had their pensions tied to CalPERS, my grandpa, friends, family, I realized that this is a systemic problem that CalPERS is contributing to. And by myself pulling myself out of that and going to fix the bigger problem, I'm going to help all holders of investments, including CalPERS, in ways that I never could at CalPERS. And that was my learning. That's what led me to leave and be part of this revolution of restoring all these core American principles.
Well, I'm glad you're at Strive, and I know you had an awesome career at CalPERS, so kudos to you for that. Um, so you're a CFA. What exactly does that mean? Can you explain to my teen audience what is a Chartered Financial Analyst?
Yeah, it's probably the most difficult thing to achieve for a finance major with regards to a certification or a degree. And it's a 3-year program, so you have to take 3 different tests, one each year. So CFA level 1,
Hmm.
CFA level 2, and CFA level 3. And generally speaking, each test on average takes people about 250 hours of study
Wow.
time. And so if you think about that, and you have to also be graduated, people are professionals, so you have to have, I believe it's 5 years of finance experience, but multiple years of finance experience. So you're working full time, at least 40 hours a week, because that's what finance, requires. And then you have to study 250 hours on top of that, right, to take a test. And so it's a pretty, and you have to do that 3 times. And so it's very rigorous. The pass fail rates of the tests are fairly low, but ultimately, it's looked at as something that shows that you have a broad ability of skill sets across various asset classes, that you understand ethics and fiduciary duty. And I do find it helpful to be able to have a intelligent institutional level conversation across every different asset class. And this is, like as a learning for younger generation that I've had is that when you get into an industry like investments, what you'll find is that you can talk to people in different divisions within an organization, and they almost are speaking different languages. And so the CFA is basically gives you the ability to speak all the languages and speak across the divisions. And I think that's something that's important. But so is hard work and experience, and ultimately, I think you can do it without a CFA as well.
That's amazing. It's really cool that you both have an MBA and a CFA. That's awesome. I just thought of this question. What is your definition of strive?
Financial excellence. That it would be that simple because the hardest thing in a professional environment, whether it's finance or anything, is when you're constrained from your ability to achieve what you want to achieve and what you're able to achieve. So at Strive, we look at finance and investment and say, let's lift every single constraint we possibly can within the law and do the best we can to maximize risk-adjusted returns for our clients. And so if we're doing that, I think we're achieving financial excellence.
That's amazing. And the three are excellence, capitalism, and meritocracy, right? I love that so much. Okay, as we wrap up here, Matt, these are the last two questions that I asked all my guests. The first one is, what's your all-time best advice for teens?
All-time best advice for teens is there is no one right answer. I think a lot of people look for their career and they say, what should I do this or should I do that? And then if I go one direction, it's the right direction, one direction, it's the wrong direction. And I think what oftentimes that leads to is lack of a decision. And then people will get stuck in this middle and then they go, a year older, a year older, a year older. And then they look back and they say, man, like I just achieved basically mediocrity, whatever mediocrity was. It is better to do some research, but then make a decision. Go all in with conviction. And if you go all in with conviction in something, you're going to succeed or you're going to fail.
Mm-hmm.
But even if you fail, I think you're going to be more happy than if you sat there paralyzed and didn't make a decision.
I love that advice. That's spot on. And also, like with your career too, you've shown that like you're successful in my opinion because of meritocracy. You've worked hard and you lived the American dream, and I really look up to you and respect you for that. Last question of the day is, what was your favorite part of being a guest on the Ochakde show today?
My favorite part is that I think we're having an authentic conversation, right? And an authentic conversation to actually help people. And if you think about the principles that we care about, yes, it's capitalism, yes, it's excellence, yes, it's meritocracy. I think if we're doing our job while having a good conversation here, I think we're going to make this country a more excellent country and a country where more innovation happens by inspiring people to go out there and take risks and be the best version of themselves and move away from a victimhood culture of expecting things from others. And I think if your podcast can play a small role in doing that to this younger generation, then to me, that's worth all the time in the world.
I really appreciate that, Matt. And I love how Strive founder Vivek Ramaswamy, he always talks about excellence over victimhood, which is what you just talked about right now. And I really like that. I'm a huge fan of you. I love Strive. That was a great episode. Any last words you want to say to my audience before we end off?
Just, if you're listening to this podcast, I'm guessing you're entrepreneurial minded. So if you are, I'm going to say if you don't either achieve something massively successful or fail, you didn't reach high enough.
I love that. Thank you so much, Matt. I appreciate you being on my show, guys. Make sure to hit that subscribe button, and I'll see you guys next time.